Another episode of Foliko Live. Today, it's Monday. We're going to be getting into one of the most powerful pieces that our AI algorithms has to offer for us. It's going to be another round of earnings predictions. So this week, we've got a ton of huge tickers coming out for you. So this morning, Tyler and I are going to walk through the tickers for Monday and Tuesday. And then is it Tuesday or Wednesday? We're going to be going through the next slew, the back half of the week. So Wednesday through Friday. There are so many opportunities here that we've got to split these up into 2 days. Otherwise, we're not going to be able to really give the full treatment to everything that we like. And today, let me tell you, there are a few really powerful trades to focus on. Just looking forward in the show, look for something on Chipotle, for McDonald's, a lot of these eat out restaurants coming out. And I think there's some fantastic trading opportunities there. In the current economic environment, we're going to get into why, when, and where we're placing our money. So let's get right into it. By the way, your name placard is Travis Nixon.
Well, that's not great. Well, let's see if I can change that.
Here, I got you.
Hey, look.
There you go. Nice.
I'm Tyler Puccinello. Well, happy Fed week, everybody. This is, if you like markets, you're not going to want to miss this week. We have Microsoft's reporting. We have Meta reporting. We have the Fed probably going at least definitely going at least 75 bips. Are they going to try to jam 100 down our throat? We'll find out. This is in terms of markets and trading. This is just going to be a week full of opportunities, really. We have some interesting views on earnings, especially as Travis mentioned. Really, McDonald's is going to be our favorite for Monday and Tuesday. We do want to note around these, this earnings, we do have a serious macro schedule. We have, mainly going to be the Fed on Wednesday here. And the thing to keep in mind is that there's going to be the Fed move this week in indices in which we most likely won't get the resolution until after the meeting. Usually you don't get to, and I say this frequently, you don't get to take risk off before the event. You have to hold through the event if you want to, basically stay in long enough to have your view potentially come to fruition. There's a whole lot of, tomfoolery in the days and hours leading up as people set up positions. So I do want to keep in mind that these earnings trades we are talking about are discrete over the event. We'll talk about timing and entry and things like that, but we don't want to get caught watching the paint dry around the Fed meeting this week as it, potentially muddies the waters on. We have a pure view on earnings, and if you pick up some of the Fed, the Fed noise, you may have. I mean, it could work out too, but you could have a negative, some tailwind or some headwinds rather to your trade that you really weren't looking for. So that's something I want to start by kind of disclaiming, I guess.
So if I understand you correctly, Tyler, what I'm hearing is, suppose we're long on something Wednesday, Fed comes out, terrible news, everything's not going well, the whole market is down, and even though we're right on earnings, that news just knocks all the trades off anyway. So we've got to have a special caution on Wednesday. Is that right?
Yes. I would. It's just be intelligent with your entry and your exit is really what I'm saying. So if you like McDonald's, we're going to talk about that reports tomorrow. You're out of the trade. Tomorrow. Win or lose. We don't want to then be rolling the dice into the Fed. Necessarily. It's actually funny because my Fed view and my McDonald's view are the same direction. So maybe you do, but generally speaking, you don't want to have one view kind of start to blend and blur into another. If you have an earnings view, make sure you isolate earnings and don't end up picking up a whole bunch of extra noise. So
is there a mystery on the Fed? I mean, it's going to be 75. They've given really clear signals on that. I mean, isn't all of this pretty well priced in and expected? Is there anything that could be unexpected coming out of this?
Doing our best to avoid macro fail here. It's really about the forward guidance. We know, it's going to be 75 or 100. It's just the thing that could change people's minds and risk's mind is, do they actually think they're going 75 basis points at every meeting for the rest of the year? Do they think do they think they can go a full percent the next meeting? These are the kind of things that are going to impact price more than, yes, we know 75 is coming. It's just what next. So without any further ado, here is the earnings sheet.
And can you zoom that in, Tyler, for us?
Yes. So what you want to be paying attention to is H here. These are my notes on when I looked through and went through Foliko. These are my best of and my most interesting thoughts, I guess. So if we can, where do you want to start?
Let's do it. Let's go. Just dive right into it. What's going on with PHM?
Okay, so this is probably one of our better ideas for tomorrow. Pulte Group. I'm going to share my Foliko. Sorry, guys.
Look at that. X marks the spot. Early July earnings crossing price.
So this one's probably a tier 2 for this week. We don't have the report on our model being very strong, and we also kind of think the recent rally is pretty unfounded. Not my best idea. I'll get to my best idea. But this is a decent one to consider. If you're a housing bear, again, there are better opportunities this week, but this is just one that I definitely want to note the start of the divergence. If nothing else, it would be something to watch because, we're not in a rush here. So if that just means that we're going to have a full divergence by next earnings, then okay, so what? That's just a great trade for next earnings. So we don't necessarily have to do anything here. This is definitely one I'm watching. Because that spread is starting to get wider, and there are plenty of ways in my mind for a housing manufacturer to report some funky numbers to the downside this quarter. So again, not our best idea of the week, but a good one nonetheless.
Yeah. So what we're talking about here is coming in under earnings forecast. Now, it's interesting because the last quarter EPS was $1.84, right? And we're predicting actually above that, so 235, but that's still a miss for what the street expects, which is hovering right around that 259, 260 area, right? So not as great as Wall Street was expecting. Their price has been charging upward leading into the earnings event, and we predict that's not going to live up to expectations, essentially, right? And so what the broader housing market in general, I think that we're just going to start seeing major headwinds for that whole group. Have you seen the numbers coming in on the amount of cancellations for new construction homes?
Yeah, we can talk about those stories like that all day. There's stories in Austin, Texas, about people who up until very recently 20% through ask was considered good manners. That's we're going the other way now. So yeah, there's certainly and Foliko data is similarly kind of bearish and looking for that recessionary kind of environment. So there will be some nuance into what pockets of the market hold up and things like that. But yeah, I wouldn't be home buyers for a structural long here. Probably no.
Yep.
Something I did want to bring everyone's attention to, because I have just said so many bad things about semiconductors on this show, and we're not done being, bearish yet. Probably done being so bearish I can't see straight, but we're still decently bearish here. If I can, show you our price forecast, still not great, but we're really starting to work off some of that, that strength in earnings power. So this isn't a big enough divergence for me to trade, but I definitely will want to watch and see what happens here. That was a complete collapse in earnings power over the last month. with a decent rally in the stock off depressed levels. And that's the reason that I'm leaving this alone, is because it's just already so beaten up that, if I wanted to short it again, I'd probably wait for earnings to clear. I'd, pick out a technical location and be a bit more thoughtful than, just going after it on a 1 day basis, especially given how nasty the move has been. But it'll be very interesting to see, because, you could convince me that this big reversal in earnings power this quickly, even without a divergence, is a bearish signal. I just, from a systematic standpoint, don't feel comfortable enough to trigger it. But I definitely do want to talk about it. Travis, what do you think?
So TXN, our historical error on predicting them is 0.28. So 28 cents off on average for predicting their earnings, which is really very accurate. If you can be within 40 cents on earnings on average, that's a pretty good signal that you're getting all the time. Our models are predicting 10 cents above the street right now. So last quarter they were at 237. This quarter our models have them at 216. Earnings consensus for the street is about 206, right? So Texas Instruments, the model is seeing a little bit of upside there. I don't think it's far enough from the street to really say that the model is screaming good. And I mean, over the whole period of the earnings event, that earnings power is positive. So that's something to bear in mind, right? So throughout the last quarter, from March to June, we saw really good things. But look at what's happening over that past week. And remember our guidance on the health scores. You want to avoid cliffs to the up or downside, because that means that something is happening in this company that is going to be a little bit unexpected. Me personally, I wouldn't touch it right now. I think that we want to see what's happening in this earnings cycle and then really get down and do a deep dive. Maybe we should do another deep dive, Tyler, into semis just as a whole and the different parts of the semi market, because you have some of your commodities, you have some of your innovators and stuff like that. TXN is interesting because they're one of those commodities that people don't keep in mind that it actually is quite innovative over the past decade. So I think that would be an interesting one to talk about. But I personally am not going to trade it for this cycle.
Yeah, and that's more, we just wanted to file that under, hey, check it out, this is cool, and this is, potentially notable later. There was one other semi here that had a very similar. We'll go over, but anyhow, what I've been finding is that a lot of these semis have had, either earnings power go from positive to negative, or go back to, a neutral Z-score and then fall off. So this will be something to watch. We had talked about, the semi earnings also being another capitulatory event. I feel less good about that. If the market's going to continue, another 10, 20% lower, then, semis probably don't bottom here. But in terms of risk reward, and that's something that we really like to talk about here, and we think it's the most important thing, the risk reward on the semiconductor short into earnings, not so much. We think we have, some other better interesting ideas.
And one thing I want to showcase that I was taking a look at, and give me just 1 second, Tyler, is if you do a pivot table by sector of what we're seeing, I can pull this up, of where are these pockets of opportunity coming in. Now, this is only Monday and Tuesday earnings, right? And if you look at where we're seeing the most bearishness in terms of earnings, we are really below where the street's at for consumer cyclical. Consumer cyclical, again, and this is more of that recessionary type of feeling that we've been getting lately. But similar to what we were looking at this last Friday, utilities are really popping up above. So if you look at the overall picture sector-wise of where are we seeing strength versus weakness coming into the next 2 days of earnings, utilities on average is coming out above where the street's seeing. But financial services down, real estate down. Those top 3 or 4 right there really says something. Healthcare being down on earnings. Now, we've been pretty bearish healthcare earnings. We certainly were last week. But that was where a lot of our misses actually were. So J&J, we called that they would have down earnings. They didn't. However, they had down guidance, and that actually led us to being directionally on the stock price correct, right?
Right.
So, and actually last week was pretty phenomenal, Tyler. I forgot to mention that last week we had a miss with Ally Bank. I want to be very clear on that. We had a big swing and a miss, and my portfolio suffered from that one. But then for the rest of the week, we had 7 major calls, I believe it was last week. 6 out of the 7 were just absolutely home runs. PM, yeah, if you saw my coverage last Friday on what happened with Philip Morris, that was incredible. That was a 420% gain on selling the options contracts on that, plus a 5% gain on the long equity. So that was fantastic. That's the kind of win that we're trying to lay out for us today. I want to talk through, Tyler. All right, let's go beyond just the overall sector analysis. What is the idea of the day, Tyler? What
Yeah,
can we focus on?
let's finally talk about, things that we think are interesting and a good trading idea. So let's go here. And if you've been watching this show, this might be almost getting boring. But okay, there it is. That's your bearish earnings divergence for Monday and Tuesday. It's McDonald's. You can buy the. Sorry, I gotta check my notes here. You can buy the 252.5 calls, the weeklies, for about 350 here. That's about 2% of downside. Traditionally when we have divergences like this, we have no problem realizing that. So that is our best idea of the pile from Monday and Tuesday. There's another one I'm going to enter here shortly, officially, into the record. But that is our table pounder best idea of Monday and Tuesday. We think McDonald's is really going to the price is going to have a yard sale after earnings.
And there's a lot of reasons why I like this as a short idea beyond. So the numbers are great. Remember, we have 2 big models that we're looking at every time we're bringing you these strong earnings forecasts. First, we have the AI model coming in and actually giving a discrete prediction of here's what I think their actual earnings per share is going to be. We focus on EPS. Okay. Then we look at this chart here, and it's, as Tyler has covered on this show several times, it's the alligator jaws. It's that divergence between the price and earnings power, right? So just if you see a low earnings power, that doesn't matter in and of itself unless you see the converse price appreciation, because that means that people have misstepped in predicting where the earnings of this company is going to be. If you see sympathetic drawdown of both the price and the earnings power, that's not necessarily going to lead to much gain. In fact, it's ambiguous into that event as to which direction the price is going to go. Perhaps investors already realize that downside, right? But McDonald's coming in, they've had such a shakeup with their executives lately. And I don't think that you see an executive shakeup like that without there being bad news coming out. And I think they're trying to get ahead of the news of earnings haven't been that great. Look, investors, we've already acted on it. We've got this executive shakeup. We're rearranging the management team. And it makes sense. I've taken my kids to McDonald's a few times in the past couple months, and now chicken nuggets it feels like I'm paying double. It feels like I'm paying twice of what I used to pay coming into the line. Now, McDonald's is traditionally one of those stocks that holds up great during a recession. But when you're facing 8-9% inflation, and you're facing an era where McDonald's did great during COVID because you could drive through and they had pretty great COVID policies on how to withstand all the isolation and the COVID restrictions and stuff like that. But on the downside, now that COVID is letting everyone out and live their normal lives, everyone's going back to the normal sit-down restaurants. And
Right.
And one of those restaurants. So we actually have a question here. Let's see. How would you trade McDonald's? Well, I'll tell you how I have traded McDonald's. So full disclosure, on Friday, I actually went in on some options contracts, and I definitely went the put. Bought some put options contracts on McDonald's.
Which strike did you use?
For me, it was Friday, so I've got to remember. 242.50.
Okay, so that's a bit more out of the money. So that would be appropriate with given the large divergence, we think we can get a large move. So using something more out of the money in terms of it, how to trade it would be more appropriate. For record keeping on the show, I use the at the money option in the prevailing direction of whatever we're using, just so I can keep an intellectually honest record. But yeah, I mean, the 245 strike, the 240 strike, going a little bit further out seems to make sense given we've observed large reactions the larger the spread between the earnings power and the stock price gets. So, we definitely could see some, pretty decent downside. But to reiterate, for record keeping on the show, I will always use the at the money option.
And what is that at right now?
The at the money is 252.5.
Okay. Okay. Wait, I mean, that's a move of just a couple dollars down, and we're already down almost 50 cents on the pre-market this morning.
Oh, I just saw. I saw it was like down like 16 cents. Okay, so it's already starting to move. So on something like this, we are happy to enter the trade at the open, and for record keeping purposes, we will enter the McDonald's puts at the open. I do want to get your thoughts though on another food stock that's kind of got my attention over here. Chipotle. What do you make of that?
I mean, it's got the shape,
right? Is it actually too bad to short? We've done some studies that straight -1 is almost too bearish to short because it's the bottom of the range, and we really usually recycle higher. So there's about a 4% move priced into the at the money puts. What would you do with that?
You know what I see with that though is this has happened a few times that we've seen such huge movements like this, and this is indicative that even if you get the trade wrong, you're going to get the guidance right. So it's all about that motion, right? If we go to the model, we are below where the street is on this CMG. The model is definitely predicting some bearishness. As far as the error on the model is a little bit higher for this one. Their EPS tends to be at a certain range where the model starts to suffer a little bit. So CMG, I think it's worth going in on.
Okay.
And for just myself. How about you?
It's right on the line because I can make up all sorts of stories for one of those -10% earnings reactions, right? I mean, there's everything's there. We have the move away from DoorDashing back to restaurants. We have input costs higher, across the board. So
click on the 10-week real quick. So look at that 10-week. Although it looks like a pop down, this is a trend.
Right.
And it's actually a fairly smooth trend. I mean, you had a little bit of a floating up in June. And Chipotle is, I don't think they're one of those recession-proof stocks. I don't know. I think that this is probably, to me, it seems like a good opportunity, although I will, full disclosure, say it's not part of my portfolio this week.
Okay, so let's do that. We're going to enter this for record-keeping purposes. The 1350 put for this week is $47. That's about 4% downside from here. We will, at the open, for record-keeping purposes, enter this as a trade. If I was, sizing it versus McDonald's, I do, 2 McDonald's for everyone Chipotle. That doesn't work perfect. I do it in terms of full notional. Obviously, you can't do, on a contract basis, but I would do, if you were going to do 10,000 worth of Chipotle puts, I'm making up a number. I do 20,000, in terms of McDonald's premium, all other things equal. So
and
that,
yeah. And real quick on that, on the pizza or on the food, we've got a question. Thoughts on DPZ?
Yeah. So reported earnings, pretty good reaction last week. Finished under $400. I'd stay short. I think 320 seems like a reasonable reasonable check back point on the stock price. Especially, just looking up here and seeing some of the levels on some charts. Yeah, this looks like exactly what you would want to be seeing if you were, entering a short here. It all sorts of failed at higher prices, broke back down on earnings. So yeah, still bearish.
So Troy Ed comes out here. He's saying something interesting. So not a question, but he's making just a point here. They've announced investments in startups focusing on kitchen automation and plant-based alternatives. To me, that's a company that wants to show their investors that they're doing something to solve a problem, that they have anemic growth and they aren't they thought they would coming out of COVID. So if you have someone investing in startups like that, it depends on how big of a strategy this is. Like if that's the message that takes up a lot of their call, I'm bearish as anything on that.
Right.
If it's something that they just quickly drop in and say like, oh, by the way, we're doing some cool stuff here, then that's fine. That's fine. But I want Chipotle to be making cash. This should be a great free cash flow business, especially right now as people are coming out of their homes and buying and sitting down in restaurants and they're comfortable with that again. I want cash. If cash isn't the number 1, 2, 3, and 4 things that they talk about in their earnings, then I'm not interested. So interesting on the investment startups there. I don't know.
Well, I mean, it's interesting, right? Because it kind of points to, want to know who does not ever complain about minimum wage and salaries? Robots. So, that's to that point of, it's starting to get kind of expensive to pay workers, to attract people. It's just been a squeeze, especially in that sector. I would argue the rate of change in salaries there might be amongst, the highest. I made that statistic up, but I'm just kind of thinking through it. Like, I've seen very large, moves. It's, I think I saw like $20 an hour minimum wage used to be. So that's, that's 100% higher. Not to say that that's the right level, but on a rate of change basis, that's what hits companies from quarter to quarter is, oh, by the way, our prices really shot up, in the last quarter. So it would definitely make sense that they'd love to have, lower staffed, automated ghost kitchen kind of things, especially if you're going to be delivery focused. Because if you just have, 1 or 2 people and some robots making burritos for people to pick up, that's way less cost intensive. So that definitely makes sense, in the context of what's going on.
It makes sense as to why they would want to do that. But to me, this gives a little window and a view into we're going to see in their earnings report. Oh, it's not our fault. Input costs are up. This labor market. Oh, it's not us. Let us keep our jobs as executives. But I mean, this is the Uber play. Anytime you're telling me, oh, our costs are too high, but don't worry, we're going to automate. I don't buy it for a second. No. So Chipotle, I'm pretty bearish on the company in general. Ever since they started seeing rats in the serving room, I haven't really frequented the location too much. The corn salsa is the greatest thing on earth, but other than that,
no. I mean, they're pretty good burritos, and that's the problem is, what kind of multiple are you going to pay for pretty good burritos?
Cash. I want to see cash.
Right.
That's it. Anyway, so quick thing and announcement that we were talking about last week. I want to make sure all of our subscribers are seeing this. If you are subscribed to Foliko, the product, get in, and we're going to be sending you these earnings reports and predictions every day to your inbox. That's going to be landing perhaps at the start as early as next week. We're going to start getting this going out to you so that you're going to be able to do all the same analysis that you see us doing here on the show. You're going to have all those numbers and predictions at your fingertips. If you are not a Foliko subscriber, get in there and subscribe today at www.cinerai.com. There is a direct link in the description of this video below. Subscribe to Foliko Live, our channel. It's going to help us out, and we're going to be able to bring you these insights every morning at 8:30 a.m. And thank you for joining us today. It's been great being with you. Happy trading. We're going to go off and get to it. 29 minutes. Market's open.